Once the most prosperous economy of the region, Egypt's economy is now collapsing. Egypt has recently emerged as a promising global investment destination, with financial experts labeling it the hottest emerging market globally. Investors are rushing to capitalize on the lucrative opportunities presented by the country's thriving capital markets as foreign holdings of local debt surged by over 20% in December 2018 compared to the previous year. This trend was expected to continue in 2019, with one investment bank calling Egypt's apparent economic recovery the most attractive reform story in the Middle East, Africa, and Eastern Europe. However, this rosy picture of Egypt's economic prospects tend to mask the stark reality of widespread poverty and vulnerability. According to a report by the World Bank published in April 2019, nearly 60% of the country's population falls under the category of poor or vulnerable. So, watch this video and subscribe to the channel as we are shedding light on Egypt's economic problem. Egypt is currently facing a severe economic crisis that poses a significant threat to its internal, economic, and foreign policies. The crisis has led to public dissatisfaction and potentially triggered social unrest. The ongoing war in Ukraine has intensified the situation. The global economic effects of the conflict have exposed Egypt's heavy reliance on imports of fuel and food, which have become too expensive for the country to afford. Additionally, Egypt's dependence on short-term foreign financing has also become more costly. As a result of this imbalance, the country's currency has been devalued and inflation has surged, disproportionately affecting the middle and working classes. In the early months of 2022, the absence of foreign currency in Egypt has led to a significant slowdown in the importation of goods, causing a substantial backlog of commodities at ports. This has resulted in a considerable hike in food prices, making it difficult for local populace to afford basic necessities. As of the end of October 2023, the Central Bank of Egypt has reported a staggering annual inflation rate of 35.6%, which is primarily driven by the exorbitant 71.7% increase in food prices compared to the same period in 2022. Over the last few months, the Egyptian currency has suffered a severe devaluation, reaching a value of around 50 pounds to the dollar on the black market, more than 60% than the official rate of 31 pounds. According to central bank data, this has put immense pressure on the economy, with the country having to repay its debts to the tune of at least $42.26 billion by 2024. Due to the rising inflation and the need to curb unrest during the elections, the cabinet announced in October that it had agreed with private producers and retailers to cut prices on essential commodities, including sugar, by 15 to 25%. Despite these efforts, the prices of these staples continue to rise uncontrollably. In just weeks, the price of sugar had increased from 35 pounds to 55 Egyptian pounds, $1.78. Although Egypt has faced economic challenges in the past, the current situation is unique, which has prompted both the government and its creditors to respond accordingly. Instead of providing an unconditional bailout, Egypt's Gulf partners are collaborating with the International Monetary Fund, IMF, which has already provided the government with a $3 billion loan to encourage Cairo to implement structural reforms. These reforms are intended to address the root cause of the economic crisis and put the country on a more sustainable path towards economic growth and stability. However, as with any crisis, Egypt's economic crisis has a historical starting point. Following the coup d'etat in 2013, the role of the military in Egypt's everyday life has grown significantly, reaching unprecedented levels. This expansion has impacted the country's political landscape and fundamentally altered its economic structure. The military has become deeply involved in various civilian sectors, including transportation, telecommunications, and media. In some areas, military-owned companies have taken over entire industries, undercutting the private sector and leaving little room for competition. One example of this trend is the construction of the new administrative capital, a massive development project in Egypt. The project is being built by a company co-owned by the Ministry of Defense alongside an economic authority controlled by the Ministry of Housing, Utilities, and Urban Communities. This collaboration has effectively given the military a direct role in shaping the country's urban planning and development, further cementing its influence over civilian life. The military's involvement in civilian sectors has also provided a breeding ground for clientelism and patronage networks. Military loyalists are often rewarded with prestigious positions and lucrative contracts, while those criticizing the military are silenced and marginalized. In addition, military enterprises in Egypt operate without any significant oversight, with their financial dealings shrouded in secrecy. It is worth noting that Egypt's Gulf allies, particularly Kuwait, Saudi Arabia, and the UAE, have been instrumental in supporting President Sisi's regime. They view Sisi as a critical ally for maintaining stability in the Middle East and have provided billions of dollars in bailout aid to the Egyptian government. This support has strengthened the military's grip on power and ability to shape the country's economic and political landscape. But how will Egypt solve its economic problem? Well, as mentioned, Egypt agreed to conduct reforms in order to get substantially more from the IMF. Egypt has recently committed to reducing the military's involvement in the country's economy in line with the $3 billion International Monetary Fund (IMF) bailout package, as the Arab state is currently grappling with a foreign currency crisis, a weakening pound, and rising inflation. Implementing these reforms is critical to stabilizing the economy. The IMF stated in a press release at the beginning of 2023 that these critical structural reforms were part of a state ownership policy endorsed by President Abdel Fattah al-Sisi, which aimed to level the playing field between the public and private sector. This policy would cover all state-owned enterprises, including those owned by military, in a rare acknowledgement by the IMF of the Army's expanded footprint in Egypt's economy since the 2013 coup that brought former Army Chief Abdel Fattah al-Sisi to power. However, several factors question the effectiveness of such reforms. Firstly, businesses are skeptical that the government will decrease industry ties with the military. According to several sources who spoke to the Associated Press, there is a prevailing belief that the government and the army in the country will continue to be anti-competitive. Despite being in early April, all state-owned companies have yet to be sold, and some critics are questioning who would invest in the country. Large multinational companies have already left, small firms have been pushed out, and public agencies are notoriously secretive and slow. Timothy Kaldis, the deputy director of the Tahrir Institute for Middle East Policy in Washington, expressed skepticism about investing in a country with a powerful state competitor with little regard for the rule of law. These former and current company owners, who asked to remain anonymous for fear of retaliation by the government, have stated that the military's influence in specific sectors means that going into business with them is the only option. They do not expect this situation to change anytime soon. These business owners have also reported that the contracts offered by state firms cannot be negotiated, and payments often arrive months too late. One entrepreneur who started a waste management business in 2019 discovered that a state-owned company proved to be too large of a competitor and too unequal of a partner, making it difficult to succeed in the market. It's worth noting that the overall population of Egypt is heavily skewed towards the younger generations, with each successive older generation having a lower population count than the one preceding it. For instance, while the number of people aged between 65 and 74 years was around 3.3 million, those aged 75 years and above amounted to just 1 million people. Official data has shown that so far, Egypt has achieved a sizable breakthrough, as since 2015, youth unemployment decreased from 34% to 17% in 2022. Given the country's track record of military influence over the economy and a demographic ticking bomb, there is little hope that Egypt will overcome its economic problems.